Right, so welcome to the podcast today. Now, following up with our video on the ICAG syllabus review and what to expect, we have received a couple of questions from students across, asking a couple of questions about the syllabus, what their chances are, what they are supposed to do, how they are supposed to approach it, and what they are supposed to generally expect based on whatever decisions that they are going to be taking. So on the podcast today, I want to address some of the questions and most importantly also touch on some crucial issues that you need to understand, take into consideration as we go into 2024, March 2024 examination, as well as July 2024 examination. Now remember to stay connected because I'll be releasing a couple of other videos in this series explaining various things that we need to really understand and the things that we have to really focus on to ensure that at March 2024 and July 2024 examination, if you are going to be sitting for any of these exams, you are going to be in the better position to pass the examination. So remember to like, subscribe, and share the video. Let's reach as many students as possible. Let's get into it. Question number 1. May I know the consequences if you are left with a paper in level 2, but have passed all level 3 papers and the changes affect level 2? Now, that is an interesting position to be in because there are some people who have finished the level 3, they have written all the papers in the level 3 and they have passed. But for some reason, they have a paper in level 2, probably management accounting or public sector accounting and finance or financial management or something like that in level 2 that they are still battling with. Now, the deal here is this, like I said in the original video, what is going to be happening is that if you're in a level and a subject is introduced in that level, it means that you are going to be writing any subject that is introduced in that level. So in a classical example, you are in level 2, you still have some papers left in level 2, a paper left in level 2, and then in the revised syllabus, a new subject is introduced in the level 2. If a new subject is introduced in the level 2, it means that you are going to be writing that new subject in addition to the subject that you are having outstanding if it has not been taken out from the syllabus. Now, the level 3, since you have already completed it, you are through, it depends on the ICAG. So for that one, I'm going to be leaving that to the ICA later on when the syllabus is introduced and we are doing some Q&As on that. I'm going to be getting some knowledge on that because like I said, the general rule is that because you are finished, if you are finished with a level, then if there is an introduction of a subject, then it's not going to be affecting you. So once you are finished with a level 3, chances are we are done with it. Hence, if a subject is introduced, which I don't expect going into the new syllabus though, but we don't know how the new syllabus is going to be structured though, but that is how it's going to be. As you are in level 3, you've done everything there. 99.9% of the time, there will not be anything that is going to affect you. But in the level 2, the paper that you are left with, if there is an introduction of a new paper, then definitely you'll be writing that paper. So that is how that is going to be like. The second question that I have here is, what about if you pass, let's say, PSAF and they review it? Once you have passed the paper, any revision doesn't affect you. You have passed it, that's all. So if you pass public sector and they review public sector, you have already passed it. It's not going to be affecting you. So there is not going to be any impact on you if you have already passed the paper, but you are still in that level and they have revised that particular subject. You are not going to be required to write the revised paper. Like I said, the only thing is that once you are in that level, if a subject is introduced, if a new subject is introduced in that level, that means that you are going to be writing that new subject. But if you have written and passed a subject and in the syllabus it has been reviewed or revised, there's no problem about that. Don't worry yourself. You are cool. You are good to go and continue with what you are doing generally in that case. Then the next one, it says, please, what sitting next year will the syllabus be introduced? The syllabus will be introduced in the first quarter of 2024, but the first examination for the revised syllabus will be the November 2024 examination. It means that with the current syllabus in place, it has 2 examination sittings to go. That is the March 2024 and then the July 2024. That is all with the current syllabus. So the first examination for the revised syllabus is going to be November 2024. So 2 more dates for the existing syllabus, then boom, we transition to the new syllabus in November 2024. So technically what it means is that in July 2024, once you write that exam, from August, September, October, lectures are going to be based on the new syllabus, as the examination will be based on the new syllabus as well. So that is what you must understand in respect of that. Then another question that I have here is the change going to affect ACCA or not? Now, this revision is done for the ICAG professional qualification program. All right, so it's the professional qualification program that is being revised, not ACCA syllabus being revised. If the ACCA syllabus also needs a revision, they are going to be talking about that. So this is just in respect of the ICAG professional qualification program and not the ACCA. But what is going to be happening is that as they are revising the syllabus like this, the professional qualification syllabus like this, the exemption policy is going to be revised so that if you are coming in with ACCA, probably in the current syllabus, there were certain subjects that it would have been exempted from. Maybe in the revised syllabus, you wouldn't get that number of exemption depending on the objective of the ICA generally. So that is what I would say. This is strictly for the professional qualification examination, not for the ACCA. And if there is any change to ACCA, that will also be communicated by the institute. Then another question I have here is, I'm still in level 2. Should I wait for the new syllabus before continuing, or I can study now? Like I mentioned a moment ago, we still have 2 examination dates to go in the current syllabus. In other words, we have March 2024 and July 2024. If you are in level 2, I can guarantee you that if you work hard with dedication and the right mentorship in the right environment, these 2 examination dates, you can use them to become a chartered accountant. So if you don't have any medical, other responsibilities that are going to be limiting your ability to be able to study, then I would suggest that you continue with the current syllabus. Do it as fast as possible in March 2024 and July 2024. And let's hope that you'll be able to become a chartered accountant. So no, I wouldn't suggest that you wait for the no syllabus. I would say that you can do a lot in the next 2 examination dates remaining before the introduction of the no syllabus. So you are in level 2, please don't wait for the no syllabus. As far as you don't have any challenge in your studies, you don't have any difficulties, or something that is beyond your control, why not sit for it? Go in March, go in July, and all other things being equal, you can become a chartered accountant. Because let's say that you have maybe 2 papers in level 2, or maybe a paper in level 2, whatever. You can take that in March 2024, and alongside that, you are studying some of the level 3 papers. So that after the March 2024, all other things being equal, that you study well, you are in the right environment, you have the right mentorship, you go in there, write the exam, and boom, you pass those papers. Then you can take the level 3 papers in July 2024. Again, it depends on your responsibilities, your assignments, and the various options that are available at your disposal. But don't wait for the no syllabus. Go ahead, study, and sit for the March 2024 and July 2024 examination, because you could become a chartered accountant even before the introduction of the no syllabus. Another question that I have here is this. Please, I'm a new graduate with first degree who wants to start ICA. Is there any special advice for me? Generally, what I would say is that you want to study ICAG, that's fine. I would say that you need to go through the process. What does that mean? It means you need to register with the ICAG. So you can visit the ICAG student portal, and then you can register, upload your documents, apply for exemptions. With your first degree, you'll be able to get level 1 exemption and then 2 subjects in level 2, so that you can continue with the 4 papers remaining in level 2, and you can sit for them in 2s, or maybe depending on your assignment, you can write all the 4 in March, then take the level 3 in July 2024. So the first thing is to register with the ICAG, apply for the exemption. Remember, you have to pay for all outstanding fees before you register for the exams. In other words, if you apply for exemptions and you are given the exemptions, you would have to pay for those exemptions before you can get clearance to be able to register for the examination. So you need to have some money available to pay for the registration fee and also pay for the exemption fee as well. We are tuition providers, so once you register with the ICAG and you make a decision about which subject you want to go for based on your schedules, based on your time, based on the resources available at your disposal, then we will come in as tuition providers and then provide you with the mentorship, discipline, and strategy that you need in order for you to pass the examination. Aside the registration and tuition, what I would say is for you to have a really developed mindset, so that you approach this with the mindset of finishing this as soon as possible or as early as possible, because there are a lot of people who are having cold feet for the examination or for the ICE because of what they have heard. Probably a colleague at work has been saying that, oh, I've written this examination, for 4 times, for 5 times, for 4 times, for 5 times. Hey, ICA is difficult. Please, don't listen to foolishness like that. All right? Don't listen to foolishness like that, because 99.9% of the people who alter those nonsense are not serious with studying. Okay? They are not serious with studying. They sit down, they don't do anything, they don't attend lectures, they don't do anything all year round. All they are doing is work, house, family, work, house, family, work, house, family, and other responsibilities. A week to the examination, they will register for the exam, then a week to the exam, then they start attending all manner of intervention classes, then they will go to the exam and go and fail, then they come and complain that the ICA examination is difficult. So my recommendation to you is this: don't listen to any foolishness. Have a positive mindset and carve your path. Because you see, there are some people who have come in, boom, 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 and they are chartered accountants. So why is it that some other people are not a chartered accountant, and the excuse they give themselves always is, oh, the IC examination is difficult. No matter what you do, you're going to fail the exam. You see, I've written this paper, I've still not passed. Yes, ask them how they study. Observe their life. Sit them down and talk to them. You realize that throughout the period, they will never study, and they will wait a week to the exam. Then they will attend one intervention class somewhere like that, thinking that somebody will, cast a spell on them and boom, they can pass the examination. It doesn't work that way. So develop a mindset that enables you to listen to the people who you have to listen to, and have the approach and strategy that I can do this as soon as possible if I discipline myself, if I focus my attention very well, and most importantly, if I'm studying under the mentorship of a well-structured tuition provider that will help you to be able to pass the examination. It's very crucial. I've said this always. I've been in the game over a decade, and then I've had students who come and boom, 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 they pass the exam. They become chartered accountants. And you're like, wow. Like, they sit for the first time, boom, they pass the exam. Second time, the remaining papers, boom, they pass the exam, then they go. Then there are other people who are also there who have written the paper the first time, did not pass. Second time, did not pass. Third time, did not pass. And you find out, I observe, and what I see is about attitude. You realize that the people who come and boom, they go, boom, they go, boom, they go, are people who are dedicated, are people who sacrifice, are people who have a supporting system in place, are people who go the extra mile because they want to finish with this as early as possible. So they are the people who will be joining classes. Even if they don't join the class, They will watch the playback and they will ask questions about it later on. Number two, these people will do all the assignments that have to be done. Even if they cannot submit the assignment at the time that is supposed to be submitted, they will request for a permission and they will submit the assignment. They will do all manner of performance evaluation tests. They will do the mock. Whatever challenge they have, they will raise it up and they are going to be assisted. And that is the thing. So my recommendation to you is this: don't listen to any foolishness. Focus, have a mind of your own, and understand that you can do this as quick as possible and become a chartered accountant as early as possible, because that is really possible. And don't listen to any negativity. Now, I don't care who is speaking to you, because some of you, maybe it's your boss at work and your boss is saying that, oh, the ICA is difficult. And you know, sometimes when people in authority are saying that something is difficult, you become a bit intimidated, because this is somebody who you think they should find things very easy. This is somebody that you think they shouldn't have problems with these things. But here they are saying that, oh, this thing is challenging, this thing is difficult. So be careful. Don't listen to anything that will demoralize you or that will prevent you from becoming successful. So that's the second thing that I want you to understand. Then my final thing is this: that check our YouTube channel, the How To playlist. There are a lot of videos that I've covered on how to study, how to revise, how to prepare a study plan, how to strategize yourself, the key areas that you have to focus on in respect of whichever subject that you are writing. Get access to some of these videos, watch them. But most importantly, make sure you enroll to study under my mentorship. Very important. It's going to assist you, because our environment, our culture, our community is created in such a manner to really bring the best out of people, and most importantly, assist them to become successful as fast as possible and move on with their life and focus on some other equally important things in their life. So you can check the description of this video or head on to NhyiraPremium.com. You can also download the Nhyira Premium mobile application on the Google Play Store or the App Store and enroll in the course Study Under My Mentorship. Let me assist you with a team here so that you can achieve this goal as early as possible. So that's my recommendation in respect of your journey. Then another question that I have here is this: when there are new taxes, when does the CA examine them? Now, per the ICA's policy, they start examining new tax laws 6 months after they become effective. So this is for students writing principles of taxation and advanced taxation. So it's going to be 6 months after the law becomes effective. So in the current budget that is being debated in Parliament, assuming it is approved in its raw state the way it is, there are a couple of reliefs, there are a couple of extensions, there are a couple of taxes that have been introduced and all that. The CA will examine these in the July 2024 examination, not in the March 2024 examination, because of the 6 months deal. And that is the general rule, that if any law becomes effective 6 months after it becomes effective, that is when the ICA will bring a question in respect of these new tax laws that you have to take into consideration. So that is what you need to understand in respect of that one. The next question that I have here is: are there new IFRSs to pay attention to going into 2024? Yes, there are a lot of IFRSs to pay attention to going into 2024, as well as amendments to existing accounting standards that we have to really pay attention to. So stay with me. Let's look at some of these things well here. Now, on 3rd November 2021 at the COP26 in Glasgow, the IFRS Foundation announced the establishment of the International Sustainability Standard Board. Now, the International Sustainability Standard Board was established, among other things, to issue accounting standards in relation to how organizations report on their impact on the environment and how they ensure that environmental sustainability is achieved. Now, you know this day and age that we are facing global warming, climate issues and all that. So even businesses are allowed to operate in certain markets or get access to finance or investment depending on what we call their ESG score, that is the environmental, social, and governance score. In other words, if you're a company that is not mindful of the environment or mindful of sustainability of the environment and you operate anyhow, you are likely not to get a funding that you need, or you are likely not to be allowed to even operate in certain markets. So it was on the background of this and the request that the IFRS Foundation established the International Sustainability Standard Board. Now, let me share with you a couple of things quickly about their key objectives. The International Sustainability Standard Board sets out, 4 key objectives that they want to go by. The first one is to develop standards for a global baseline of sustainability disclosure. 2, to meet the information needs of investors. 3, to enable companies provide comprehensive sustainability information to global capital markets. And 4, to facilitate interoperability with disclosures that are jurisdiction specific and or aim at broader stakeholder group. Now, so this standard board, once it was announced and formed in November 2021, the first 2 standards that they have developed is set to be issued in the first quarter of 2024. And these are the IFRS S1 and IFRS S2. Now, IFRS S1 is about general requirement for disclosure of sustainability related financial information. And then IFRS S2 is about climate related disclosure. So really, these standards are not about, what we are supposed to present in the financial statement, how transactions are going to be recognized, like initial measurements, subsequent measurement, and all that. Really, these are disclosure standards. In the notes to the financial statement, what are the things that the entity is supposed to disclose to ensure that primary stakeholders or key stakeholders will actually get the information that they need in order for them to make informed decision about the company that they are relating with. And so these 2 standards are going to be effective in January 2024, and you have to take note of it. Now, we're going to be getting into them later on in the IFRS masterclass discussion, but for now, you must understand that IFRS S1, IFRS S2. Really, for the March 2024 and July 2024, we don't expect the examiner to set any questions in respect of these standards, but they are going to be in the new syllabus because the ICAG has held a forum where they brought in industry experts to discuss how these 2 standards can actually be applied to companies here in Ghana to ensure that there is that global conformity in the disclosure requirements for organizations. So really, these are not going to be your headache in March 2024, in July 2024, but in the new syllabus in November 2024, these standards are going to be applicable. So that is the first thing that we need to understand. The second thing also is that the International Accounting Standard Board has also issued some amendments to existing accounting standards that we need to be mindful of. The first one that we must know about is an amendment to the disclosure requirements in respect of accounting policies in IAS 1, presentation of financial statements. Now, the amendment is just a very simple thing that companies are required to now disclose their material accounting policy information instead of significant accounting policies. Now, prior to this amendment, the requirement was that companies are supposed to disclose accounting policies based on their significance. So significant accounting policies that they are using in the preparation of the financial statement should be disclosed. Now, it is not about how significant the accounting policy is, but it should rather be based on the materiality of the accounting policy. The idea is to reduce the volume of disclosure and to all just provide disclosure for things based on their materiality. So it's going to reduce the number of paragraphs that companies will write in respect of disclosure when it comes to accounting policies, but they are supposed to now just provide things that are really material to the financial statement to the users so they can understand and make significant decisions. So that is the first thing we must understand. This actually became effective in January 2023. But it is something that you need to understand going into the future in 2024. The next thing is the amendment to the definition of accounting estimate as enshrined in IAS 8, accounting policies, changes in accounting estimates and errors. Now, current definition for accounting estimate is that an accounting estimate is an approximation of the amount of a business transaction for which there is no precise means of measurement. Now, this definition is a little bit not clear. So the International Accounting Standard Board has issued an amendment to give a definition to what accounting estimate is. And so the new definition for accounting estimate as per this amendment is that accounting estimates are monetary amounts in financial statements that are subject to measurement uncertainty. Monetary amounts in financial statements that are subject to measurement uncertainty. So that is the new definition for accounting estimate. Now, it is important to also know that the board clarifies that a change in accounting estimate that results from new information or new development is not the correction of an error. So that is also another thing. Now, this also became effective in January 2023, but going into 2024, it is something that you must know about. So if someone should ask you, what is accounting estimate? Your definition is that monetary amounts in the financial statements that are subject to monetary uncertainty. So that is the second thing that you need to understand. The third issue about the amendment is also an amendment made to IAS 12 income tax in respect of how deferred tax is calculated and recognized on certain items. For instance, the introduction of IFRS 16, which is leases, brought in the way we are supposed to account for leases, which is contrary to the way we saw leases in IAS 17, the previous accounting standard. But then what is the deferred tax implication of leases and deferred tax implication for decommissioning cost or provision for decommissioning cost? And so there is a new amendment on how we are supposed to account for these things in the financial statement of the entity. And we will discuss this also later on when we are doing the IFRS masterclass. Again, this also became effective in January 2023, but going into 2024, it is something that we need to really be on the lookout for, how we calculate deferred tax assets and liabilities on lease obligations and lease assets, and the way we calculate the deferred tax assets or liabilities in respect of decommissioning cost. Now, in addition to these two things, there is also an amendment by the OECD in respect of what we call the International Tax Reform Pillar 2 model rules. Now, you see, this is what happens generally. There are many countries, in order to attract foreign direct investment, to increase their GDP, create employment and growth, they provide tax incentives or tax benefits to various investors. What it means is that these multinational companies will come into, especially these developing countries and even some developed countries, and they are going to be given favorable tax breaks. So the new law here is that where multinational companies whose revenue is at least 750 million euros is preparing their financial statement, there is what is then called the top-up tax. In other words, the minimum tax to enhance international tax compliance and growth and equality, the minimum tax that every company is supposed to pay in whichever jurisdiction they are in should be 15%. So anytime they are paying a tax, maybe they have a subsidiary that is paying a tax in a certain jurisdiction below 15%, there has to be a top-up tax that the parent company must pay. So that is the rule about the International Tax Reform Pillar 2 model. It is a way to ensure that countries don't get a lot of investment at the expense of other countries. Because if, let's say, Ghana say that okay, any company coming to operate in Ghana, whatever income you earn, you are going to pay 10% as tax. A lot of companies would want to come because in their country of origin, probably they are paying 25%, maybe they are paying 30%. So then they would troop in and come and do a lot of investment in Ghana, thereby preventing their home country from growing, from expanding, from getting a higher GDP and bringing about economic development in their individual countries. So to prevent this, there's a benchmark of 15%. Anything below 15%, then there has to be a top-up that a parent company must pay. And we will get into some of these things also later on during our IFRS masterclass discussion. Now, technically, this does not change the way we do calculation for taxes, deferred tax, asset, deferred tax liabilities and issues, but we'll get into this later on during our IFRS masterclass. But it is something worth noting going into 2024. Then another amendment to IAS 1 is about how to recognize liabilities in the financial statement, in the statement of financial position. You know, in the statement of financial positions, liabilities can be current or non-current. Now, how do we determine if a liability is a current liability or non-current liability? Under the existing IAS 1, companies classify liability as current when they do not have an unconditional right to defer settlement for at least 12 months after the reporting date. But this has been removed by the amendment. So now, we are not going to be classifying liability as current just because we don't have that unconditional right. Now, the rule is that a right to defer settlement must exist at the reporting date and have substance. A right to defer settlement must exist at the reporting date and have substance. So if we want to classify a liability as current, we just ask ourselves, okay, do we have an unconditional right to defer it? If we don't have an unconditional right to defer it in the next 12 months, then that means that we classify it as a current liability. But if we have an unconditional right to defer it above 12 months, then it will be a non-current liability. Now, what we are saying here with the amendment is that that right to defer must exist at the reporting date and must have a substance. So it is not left with just judgment, it's not just left with assumptions, it must exist at the reporting date and it must have a substance. Now, let me give you an example of this. Especially some of these things will be liabilities with covenants. You know, there are certain liabilities that a company will have, and the liabilities will come with a covenant. So let me give you an example of what we are talking about here, especially when there is loan with covenants. How do we decide whether this loan should be accounted for as a current liability or a non-current liability on the face of the statement of financial position? And this is an example from the publication made by KPMG. So I'm going to be sharing that with you here. You're going to see that on your screen as well. A company has a loan that is payable in 5 years. The loan includes a covenant requiring a working capital ratio of at least 1.2 on 31st December 2024 and 1.5 on 30th June 2025. The loan becomes repayable on demand if the ratio is not met on any of the specified covenant testing dates. The company is preparing its annual financial statement for the year ending 31st December 2024. The working capital ratio at 31st December 2024 is 1.3, and the company expects the ratio to be 1.4 at 30th June 2024. So let's do the analysis. At the reporting date, the working capital should be at least 1.2. So when they tested in the December 2024, the impact on the classification is yes, because the company complies with the covenant at the reporting date, it will classify the loan as what? Non-current. Future covenant. Working capital of at least 1.5, and that is also in the 30th June 2025. No. Covenant that the company must comply with after the reporting date do not affect the classification of the loan at the reporting date. However, new disclosures will apply. So if at the reporting date we are breaking the terms and conditions attached to the loan, then the loan is likely to be called to be paid. Hence, although it's a non-current liability, although it's not due to be paid, we would have to classify it as a what? Current liability if we don't meet the criteria at the reporting date. But if it is something in the future, like in this example, you must have your working capital ratio at the rate of 1.5 on 30th June 2025, which is after the reporting date, that will not affect the recognition of the item or the classification of the item on the face of the statement of financial position. And so that is what you need to understand about this. And again, we would get into this in detail when we are doing the IFRS masterclass. But that is what you need to understand, that when we are classifying liabilities as current or non-current, especially liabilities with conversion options or liabilities with covenants, we would have to look at the reporting date. There has to be that right to defer at the reporting date, and that rights must have a substance. Then and only then can we classify it as current liabilities or non-current liabilities. Then there is a new accounting standard that is currently in the pipeline as at the time of shooting this video in November 2023. That will be published in the first quarter of 2024. And the name of that accounting standard is IFRS 18, Presentation of Financial Statement. This new accounting standard is going to replace IAS 1, the current IAS 1, Presentation of Financial Statement. Among other things, the accounting standard is going to be published in the first quarter of 2024, but will be effective in January 2027. So it's not something that we will be expecting currently though, but it is something that you need to know about. There are a couple of new, accounting issues that we need to look out for from the International Accounting Standard Board's website. Number one is to disclose two subtotals in the profit or loss statement. Two subtotals. So you have operating profit or loss and profit before financing and income tax. Currently what we have is gross profit, and then we have profit before interest and tax. That is going to change to profit before financing and income tax. Then number two, to disclose management defined performance measures, subtotals of income and expenses that are not defined in IFRS accounting standards and that are used in public communication outside of financial statement to communicate the management's opinion on some aspects of the company's financial performance. And then to strengthen the requirements for aggregation and disaggregation of information in the primary financial statements and notes. So these are a couple of things that you need to understand about new accounting standards that we have to be on the lookout for and be expecting as we continue. Then also there is this accounting standard IFRS 17, which is insurance contract. Okay, this standard also became effective in January 2023. Now, insurance contract, this is strictly for insurance companies on how they can account for revenue and profits, and it requires a company to recognize profit as it delivers insurance services rather than when it receives premium. And to provide information about the insurance contract profit the company expects to recognize in the future. So this is typically for insurance companies, so that you don't sit down and you have received premium, you've received premium, but you have not done anything. Then you recognize a profit and record a profit, a huge amount of profit, but you've not done anything. So now you're going to be recognizing profit based on the insurance service that has been provided to clients and not based on premium. And so this is strictly for the insurance companies that you have to also know about if that is an industry that you're going to be in. And really it depends on the objective of the ICA, because this is a standard though, but a lot of things in other industries other than manufacturing organizations are not really covered in the ICA syllabus, and some of the issues have been they cannot touch on all the industries, and some industries are dedicated and are specific industries. So although this standard is there, it may mean that the ICA will never set a question on it or will never ask about it. But it depends. As we go into the future in the revised syllabus, as they look at things, probably this is something that would have to be looked out for. But IFRS 17 insurance contract is an accounting standard that we need to know about. So these are some amendments and new accounting standards that we need to be on the lookout for going into 2024. And some of these are going to be applicable in the new syllabus that will come in November 2024, or will also be applicable in the March 2024 and July 2024 examination as they became effective in January 2023. Like I mentioned, for these accounting standards during our IFRS masterclass, we're going to be taking time to discuss them in detail and also bring out the key issues that you need to be on the lookout for as you go into the exam hall. Thanks for watching, and let me know if there are any other questions, something that you would want me to share my thought on. Don't hesitate, put it in the comment section or the chat box for me. I'm going to be reading all your comments and then answer them in separate videos to assist you so that this journey can be an interesting one, but most importantly, you can pass the exam and take your life to the next level. Remember to like, subscribe, and share the video with others, and let's reach as many students as possible watching these videos and also getting access to our channel, so together we can assist a lot of people to become successful. I'll see you in the next episode as we continue with the journey.